What's up, everyone? This is Dre. Dre Trades on Instagram, Twitter. This is Dre on YouTube, and I want to talk about how was that? Yeah, I'm live today, Saturday. I'm making a Saturday video. Yes, indeed. I want to talk about how to get started trading stocks. Now, my way is a little different from other people because I'm gonna tell you the real. I got nothing to sell you. Okay, it's all just me, and it's how I got started. And it's not that I'm anybody. I'm just a dude that trades, right? So I had a on my Insta. On my YouTube stories, I had a guy that asked me, "Hey Dre, how do you get started trading?" But on YouTube stories, I can't return comments. So I was like, you know what? I'm gonna have to make a video. So here it is: how to get started trading. If you can hear me, I appreciate it. I need to adjust this camera a little bit. Give me a minute. Give me a minute. All right, that's what happens when you're making a live video. All right, so first, I'm going to tell you how I got. Well, first, I'm going to tell you how to get started, and then I will tell you how I got started. How to get started trading. You can always buy somebody's course, all right. But word to the wise, most people that's selling a course don't make money trading. Because if I was selling a course and I make money trading, I'm not selling a course. I'm going to make my money trading. See, they make more money selling a course than they do trading. They never really show you their P&Ls or show you anything about trading. They just show you the things about the course. And look at me, I'm on a plane, I'm on a boat. I got a Lambo. Okay, so they don't show you the real deal, live trades or what they're doing. Things are manipulated. There's two accounts, right? And you buy on this account, sell on this account, and you show you the account, the one that made money, right? So it's like 50-50. They don't lose anything, but they can show you winning accounts. So just be careful. Now, there is honest people out there, but a lot of people, they just really into selling the course and they just want to make money selling courses, not make money trading. Boy, if I get making $1,000 a day, $2,000 a day, 5,000, 10,000, I'm not selling a course. I'm going to focus on my trading and figure out how to make that multiply. I want to jump all in. I'm going to jump all in, right? With the trading, with the instead of selling. I mean, you got to make videos, produce videos, make content, tweet, market. I don't got time. Yeah, so if they're doing all that, how you got room? How you got time for trading? So now, if I ever sell course, I'll be back deleting this video. No, I'm just kidding. Cashmatic, what's up, man? Yeah, marketing is all they do. They never trade. If you really into selling a course, how do you have time for trading? Because you got to market, you got to promote, you got to make more content about selling a course. So I mean, just got to use common sense. Now, there are some real people out there, okay? And you can learn off of. Just be careful. Make sure you find the real deal. Okay, Trick 4064. I'm surprised your channel has so little views. Truck drivers don't seem to learn. Hey, I know what I'm talking about. Airing up tires. I'm talking about compressors. People are running that around all week. Away from home, making 1,000, 2,000 a week. You can make that in a day trading. So I don't understand how drivers don't kind of maybe focus on that, because you know what, you can get out of the truck and you could be home if you learn and really do it right. It ain't easy, but you know what, trucking ain't easy. So that's what I want to do. My whole goal is to get out of the truck, and when I perfect it, because it's not perfected, I've been doing it a long time and I do lose money, but when I perfect it, I'm not working at all. I'm just going to be sitting here chilling, making trades. I mean, I showed you some of the trades, some of the days I made, and I had a phenomenal week, a phenomenal week. It could have been even more phenomenal, and that's what pissed me off. And that was my last video, man. You said you could barely keep up with all the stocks you see in the scanner. Yeah, that's why you just got to pick a few. You just got to pick a few and work those. Do not go, I got to find a stock to trade. Pick your few. Have no more than 5 stocks. And when one of them are right, trade them. That's what I do. I don't really kind of try to find stocks, man. I don't know. Just find your favorite stocks, put them in a watch list. And me, I'm like, lately I'm Amazon and Tesla. I might dibble with GLD. I might nabble with, gosh, I can't even think. IBM, because it doesn't move. I like putting iron condors on that, but it's moving now because they just had to change the CEO. He said, I need to get better at trading. Just got out and want to start learning from you. What Did you the one that sent me the YouTube stories? I can't remember what state are you in. I'm in Indiana. All right, so that's one way, okay? And the other way is just to start learning. So you can't really, it's funny because learning to trade, trading in general, just buying or selling, you have two decisions to make. Two decisions. You either buy it or you sell it. If you want to have a third decision where you sit on your hands and do nothing, fine. But for the most part, when you take action, buy or sell. But most people fail. And it's just a 50-50 shot. I mean, either buy or sell it. That's why a lot of times you got to do opposite. Do you know that most, what is it, 90% of all new traders fail? 90%. So when you sign up with these brokers like Robinhood and all the new younger brokers, all brokers for the most part, but especially somebody like Robinhood, the free ones. Well, everybody's free. But anyway, 90% of all brokers fail. So they take the other side of your trades, and that's how they make money. 90% of all fail. So if you take the other side of your trades, you 90% of your trades are gonna make money. You see, that's how they make money. That's why it's free. So if you're like, man, I'm gonna buy 100 shares of Ford, guess what they do? Selling 100 shares of Ford. Man, I'm gonna buy this, 3 shares of Amazon. I got $3,000. Guess what they do? Selling 3 shares of Amazon. You know what I'm saying? So and then you fail, they made money just by taking the other side. Now they have like a couple of baskets. So basically, if they find out you somebody that makes money, they're not going to take the other side. They're going to find a way to hedge your trades. All right. But most traders fail, and these brokers take the other side of the trade and make money because 90% of the traders fail. So therefore, if they take the other side, they're profitable 90% of the time. It's crazy. But anyway, you just got to learn. In 1997, I started doing 401k investing, right? And I knew nothing about it. I was just putting money in the account, putting money in the account. And I had I don't know, $2,000-3,000 in there. And this is before computers and all that stuff. So I pick up the phone. You had to call a number, 800 number to check your balance. So let's say I have $4,000 in there. And I'm checking my balance, putting my stuff in there. Hello. Your account balance is 4,860. I'm like, what? I only put 4,000. That's when I got the bug. That's when I got the itch. Like, oh, this what? Huh? I made $800. I don't remember the exact numbers, but it was something to that effect. And I started reading books. I learned everything. My TV stayed on CNBC, and it still does to this day. Not that I follow those guys, is to learn what's going on in the market. Just be involved. Start following people. Read everything. Read everything you can. And I've been doing it since 1998. So 98, 2008, 2018. Damn, 32 years? 98, 2008. That's 10. 2018 is 20. Okay, 22 years. I'm like, I wasn't doing it that long. Anyway, and I'm still not perfect. I'm more aggressive. I don't trade regular stocks now. I invest in regular stocks, but I trade options. And that takes time. You really can't jump into that. You have to learn about stocks before you get into options, because options, you can lose all your money, all of it. Now, back in the last 22 years, I blew out a couple of accounts. Blowing out in trading is you lost all your money. I did it twice, and most likely if you're just getting started, you're going to blow out an account. Everybody that started is trading blew out an account on one time. And then when you blow out, guess what? Can't trade anymore. You got to start saving money to get capital back, because you need money to make money. And you just got to learn. You just got to be in it, man. Just dive in it. I don't recommend paper trading, because when you paper trading has no emotions in it, man. Oh man, I could turn probably a $10,000 account paper trade into $1 million, because I have no emotion attached to it. And if I try to do it with my own money, I won't be able to do it. So paper trading is good to learn the platform, right? Learn how it works. Learn how to place a buy order, sell order, limit order. Learn how to place conditional orders. Learn how to trade options, how the platform works, learn how all of that stuff. You know what? I just did a fat finger trade 2 days ago, and I'm so pissed. It was with Amazon. I was trying to do a diagonal. I was trying to buy the next week's call and sell the near week's put. sell the near week's call, okay, like a diagonal like that. And I bought the same day call, the call that expires today, and I lost $1,000 on that trade. I'm yeah, that's what I'm saying. So that's what paper trading is for. I still do it today. I thought I was on the right option chain. I wasn't. I was on the wrong chain. And I was even like, oh man, these are cheap options. Oh shit, can't believe it. Of course it was cheap. It was expiring the same day. And I put it in. It was not the most liquid option, and I took a hit. Oh man. Believe it or not, I still made like $900 that day with $1,000 loss on that particular trade. So I like options. You could really multiply your money, but you actually say you can really leverage up your money, but you have to learn how the stocks work first. Please stay away from options if you're new, and just learn how dividends work, and reinvesting works, and learn about balance sheets. By the way, I knew all about the balance sheets. I was a fundamental of I learned everything about a balance sheet back in the day. It didn't work for me. I was like, oh man, because you could invest in a cheap company, and guess what? A year, 2 years, 5 years from now, it's still a cheap company. Even though the balance sheet could be good, stocks go up when institutionals are buying stocks. That's it. Okay, if nobody buys it, the price is not going to drive higher. So you have to stay with those kind of stocks. This is stuff you learn just from doing it, right? So I'm buying these cheap stocks. A lot of cheap stocks stay cheap, so you can't necessarily find that value stock because it's going to stay that way. And then I started getting into technicals. That's when, you follow the chart of support, resistance, and all of that stuff. And that's what works for me. And that's how I basically trade. That's how I invest and all that stuff. I don't really look at balance sheets no more, but I do have a rule for investing is I only invest in stocks that make money, period. Okay. You invest in stocks that lose money, eventually you might lose all your money. That's a good starting point. Invest in stocks that make money. If it doesn't make money, just find another one. It's like 7,000 stocks out there. Find another one. You don't need to find a stock that don't make money. Why are you going to invest in that? It's not proven itself. Let it prove itself. If it can make money, it's okay. And hopefully it makes more money. But if it can't make money, I mean, like Uber's lost $5 billion in was it $5 billion in 3 months? Or was it billion? They don't make money. I'm not investing in it until it makes money. So prove yourself. Even Lyft, they don't make money. Now, if you want to try to get in early until they do make money, you're taking a risk. Wait until it makes money. Let it prove itself. But yeah, man, that's what I did, man. I've been in all the books. Now it's easier because you got Google, you got online, you got YouTube, the school of YouTube. But you have to be careful who you follow. You just got to be careful. A lot of people have agendas, and it's to make money off of you, not investing. Me, I'm not trying to sell you anything. You can follow, no, don't follow my trades. I want to put it this way. You can follow my trades, but you're going to lose money. But no, don't follow. I just kind of share what I do. Man, I have bad days. I've been posting on YouTube stories some big gains, but I have days that's big losses as well. To make big gains, you're risking a chance of big losses. So just think when stocks are going the other way. If you're on the wrong side of the trade, it could be big losses. So you have to be prepared for that. You have to be emotionally ready for that. And that's what takes the years of development and learning and just that's why paper trading doesn't work, because there's no emotions. Your emotions are gonna be like, and you're gonna make the wrong decisions. It just takes a long time. One network that on YouTube that I find but they talk about options, but for the most part, you can learn about trading, and that's Tasty Trade. So they're not really trying to sell you anything. All they do is want the viewers, and they want to get you on a platform of Tastyworks. That's their platform, and they're gonna make money off of that in the back end. But they're not pushed. They don't push it. They don't push it at all. So that's something that you can follow. Tasty Trade on YouTube. CNBC. I don't got the TV, but I got the radio tuned to it. Or if they're not going, I got Bloomberg radio going. They're not going. I don't really like Fox Business Network, but I may tune to them if whatever. If the other two channels are talking something I don't know about. And believe it or not, when that's happening, you're absorbing it. You're learning about, say, Amazon's earning came out the other day. They're talking about They talking about its top line, its bottom line, what it's into, the growth prospect, all that stuff, and you can kind of say, it just helps drill it into your head on what's good to talk the lingo. Let's put it that way. You know what I mean? And believe it or not, that helps. I don't. That's all I do. I've been doing that for years. I don't even watch TV. Just give me CNBC and I'm good. And I don't recommend following people on CNBC. Yeah, most person Cramer, fade his trades, man. He gives good ideas. You can't follow anybody on CNBC. They have agendas as well, man, including Cramer. So I think I don't know if he necessarily has his agenda is weird. Like, he's an Apple fanboy. Apple can be going down to zero and he's going to be promoting that stock. He has a certain companies. I don't know if he's good friends with the CEO or what, and he promotes these stocks. So he's almost like a stock promoter, in my opinion. It's not necessarily the right thing to do, and he never gets you out. He never says, oh, when he says get out, I don't like the market, that's the bottom. And when he says buy this, it's good, that's the top. It just, I don't like him. If you follow anybody on CNBC or start duplicating their trades, most likely you're going to fail. So just listen to the idea. So if he's talking about Caterpillar and Deere and all that stuff, you say, hey, industrials are probably moving. He's good with sectors on what's hot. Then find your own industrial stock to invest in, or just wait until the Cramer effect goes away, then buy. You know what I mean? So, because you have people that fade his trades, he tells you to buy today, he's down $3 tomorrow. He even recommends don't buy it or sell until 3-5 days after he recommends it or something like that. I don't watch it. You got to watch his show for entertainment. I don't. I'm tired of Cramer. I like, my favorite show on CNBC is CNBC Fast Money Halftime Report. And the Jarian brothers, don't follow them either, man. They got agendas, okay? They're going to tell you to buy something because they just got in. Oh, man, the stock is hot. I just bought 10,000 options. No, he won't say 10,000. I just bought the calls. Yeah, I just bought the 26 calls. I'm going to be in it for 2 weeks. Okay, then he gets y'all to buy it, and then he's out. He's out of there. As soon as he buys it, as soon as he promotes it, they never tell you when they're out, but they're going to tell you that they're in. They're going to tell you to get in, and then you never know when they get out. Guess what? They probably getting out right after you get in, because when they saying that stuff, it's popping. A lot of people, yeah, it's so many people with agendas, man. You have to be really careful. You got to come up with your own ideas. This is what takes years and years to invest, and this is why I like to have a small handful of stocks so I can learn them. And I don't need to listen to nobody. I know when it's going to go up. I know when it's going to go down. I just know how it trades. I know the patterns. And you can have a few alerts coming on your phone about those particular companies. And then, you don't have a whole big old thing of companies. Like I said, in trading and investing, to me, two different things. Because if you invest in, say, AT&T, and the stock goes down, you believe in the company, you like its financials, that's a sale. You buy more. And then when it's getting toppy, maybe you trim some off. You know what I mean? So, but trading, you're just kind of in and out. And day trading sucks too. Don't day trade. Okay? I trade for weeks. Don't day trade. Oh my God. Everybody loses money day trading. There's very few. And the people's doing day trading and telling you to do day trading, they're losing money. You better believe that, man. You can't master that. Otherwise, you don't even have time to make a video, So think about that. Just think about it. And that's so important with social media, which wasn't back then. People have agendas, so just be careful who you follow. Be careful. Just learn to talk, learn the lingo, develop your own ideas, develop your plans. Always follow your opinions, like Cashmanic says. And that's what's going to make you a good trader / investor. You could take, if Cramer or one of them Nigerian brothers talking about AT&T, just kind of look at it. You can look at it, just get an idea. Just get ideas from them, but not necessarily trading ideas. Yes, swing trade. Swing trade makes you more money. If you watch my all right. Sorry. That's why I don't do live. I forgot. I should have did it on my computer right there. instead of doing it on my phone because I just dropped the feed and I couldn't even, the whole phone just crashed. But where was I at? Man, I lost my train of thought. So I guess, I'll go ahead and end the video because I lost most of the people that's following me. I lost Cash Maddox. Let me see if I bring up his comment. Uh, do you like the Keltner channel? Oh, yeah, okay. Here we go. Swing trade. Yeah, swing trade. I was talking about swing trade. Yeah, the money that I make, those are trades I'm in. Those are not trades I'm getting in and out of. Those are, I don't like the yeah, those are trades I'm getting in and out of that just are working for the day. I believe the stock market, but I need to do a video, by the way. I don't know if you can see that. Let's watch this. This is the monthly. It's a complete chart of the SPY. You see that candle right there? That's an inverted hammer. That's not good. That is not good for the market. So you say, okay, I'm gonna sell calls above that, or I'm gonna short it, buy puts or whatever. And when the market's down 600 points, I'm like, oh man, I'm up a lot of money. And that's the idea that you get from yourselves, that you might have people, and this is why you can't follow anybody. They got hundreds of thousands of dollars in a particular stock and they need to get out. So they're gonna be like, oh man, I'm buying this market, it's cheap right now. They trying to pump up so they can get out. It's so much fraud in the market, man. It's not even funny. But Cashmatic said, man, I appreciate you, Cashmatic, hanging in there. Uh you had said, do you like the Keltner channels? I used them before. The weekly trend, I like looking at weeklies to get an idea of the trend. Day charts, the daily charts is choppy. Monthlies is even more smoother. So monthly to kind of see where it's going. And if you're using a monthly chart and you want to place a trade, kind of make it a monthly trade. Meaning, like if I do options now, I might say, okay, I plan on this being at such and such a level 2 months from now. If I'm doing a weekly chart or weeks from now, I'll kind of adjust what I'm going for when I put on a trade based on what the chart I'm looking at. And the Keltner channel, no. My favorite is the two moving averages and the MACD on the bottom, or the slow stochastic. You see my chart. So I like the MACD. Well, I don't really. My favorite is the slow moving average versus the fast one. I think I use the 20 and the 9, and when they cross or start to expand, that kind of shows me the momentum, and that's actually all I. That's what I like, and I like candles. I like big body candles, emotional candles, and things like that. Just certain little triggers that make me go and that's why I was like in Amazon Friday. It was it still hung in there like a champ, but the market was down. So it opened up at like 275 or something, like 2275. I can't remember, something like that. 2075, I think. And it closed at 2008 or 2003. So the market was down. So therefore, it brought it down. It brought it down, but it's double topping, right? That means it was a top here and it kind of did all and it finally hit the top. So it might not blow through. It might just kind of go sideways, but I think it's enough energy in there to push through. You said buy bonds. You know what? I look at bonds. I never bought a bond. I tell you what, don't buy bond funds. If you're gonna buy a bond, buy a single bond. Buy the actual bond. It's gonna cost you $1,000 or so. Don't buy bond because they're day to day. What's it called? Mark to market. You know what I mean? And you're not you're gonna lose money. Bonds are going down. If you put $1,000 in a bond fund and it goes down to get out, you're gonna be pulling out $900. But bonds don't lose money. They might, if you try to sell it, it's gonna lose money. But when it matures, you get your money back. So just as long as it don't go bankrupt, you're gonna get your money back. So therefore, if you buy uh, an AT&T bond for $1,000 that's paying you 4%, and then you try to trade, I don't know, 2 years from now, and it's only worth $900, just hold it. it's still gonna pay you 4% a year, and when it matures, you get your $1,000 back. You don't lose money unless the bank goes bankrupt. So, but a bond fund, it never matures. So therefore, you're gonna lose money when you're in or out. The RSI, I got it on my charts, but I'm not really a big fan of it because I've seen things go oversold and it continues to go oversold. You just don't, you just know it's oversold, but doesn't necessarily, just because it goes oversold doesn't mean it's gonna go down. It's gonna be, you know, people's gonna stop being oversold. So if you pull up the studies on any chart, you're gonna find out that there's thousands of them, and this is things that you learn, and you just gotta. It just takes time. You're gonna find out there's thousands of them. You're gonna have to find people that like this, that like this, that like this, that like this. You have to find out what works for you, right? And that's it. And try to have little of those indicators as possible. The reason why I got more than one, because say the MACD is popping and my little crossover thing is popping, that kind of confirms each other. And I'm like, all right, but it still doesn't have to go that way. They're just indicators that kind of suggest that a stock may move in a particular direction. But remember, stocks can always do anything they want to do, anything, so, and that's what just takes time. So that's the key. I'll go ahead and sum up the video. You can buy somebody's course, you can start following them, and you just got to be careful, or just start doing it. Just start reading books, start listening to financial channels, start learning the lingo, right? Start learning about companies. Just, Finviz is one of my favorite websites on learning about companies. You said, do I like breakouts or pullbacks? I think it just depends. I like breakouts. Well, no. See, breakouts, you can get a fake breakout. I guess I like pullbacks, but that's starting to recover and run back to the new high. I like that. That's my favorite. Breakouts it's just, it depends. It just depends. It just depends. I like them both, but I think I like when it's down and then it's starting to go up, like Twitter. Twitter's a perfect example. You can pull up that chart. Those are my kind of charts that I like. Snapchat, another one I kind of like. That's kind of doing its thing. Peloton, I like Peloton kind of coming back, doing its thing. So yeah, look at those charts. Those are the kind of charts I like. That kind of, yeah, I guess pullbacks. Those are pullbacks. But you got to wait until it starts to go up again. Don't try to catch a falling knife. Things that you will learn during your learning, and be prepared to lose money. You will lose money. You will lose it. You will probably blow out an account or two. Just be prepared for that. And, so yeah, it just takes time, man. It just takes time. Just get into it, start learning the lingo and all that stuff. He said Robinhood have spreads you can pick from. Your thoughts. You mean option spreads? I guess I'll let's put it this way. I was talking about trading. So therefore, now we'll just talk about answering your questions. How to get into trading. Yeah, there. I've kind of summed that up. Now I'll get into answering your question because this is kind of a little bit off topic. I have a Robinhood account. I used it just to invest. I don't use it anymore. I still have it. I see the options change. It's a little confusing to me. I don't know. But yeah, I do spreads all the time. Buying calls, buying puts, risky. I talk about it on my videos. Risky. Even though you can make a lot of money on it. Sometimes when you see me with big accounts, those are calls and generally straight up. But generally, I always have a spread on. It's just wide. It's just a wide spread. So options is buying calls by itself or puts is just risky because if it doesn't, you need to be right in direction. You need to be right in time. And the data will kill you, especially if the volatility is high and you bought it. Oh man, the data can kill you. The data burn meaning time decay, the time coming off that option, and you lose value. So always spread it. If you want to get more bang for your buck, just make a wider spread. That's what I do. know, so 5 point spread, I'm kind of, if I like, oh man, I really like this stock, oh, I'm going all in, then do a 20 point wide spread. Yeah, and buy two of them. Or you can buy two 5 points, buy 5 point spreads, buy 2, 3, 5 point. Yeah, we just talked about it. Yeah, so it kind of depends on what I like, how I think it's gonna move, how much I think it's gonna move. Yeah, but I try to buy one, but sometimes I buy, like right now, I'm sold some calls on the SPY and I've got 10 of them, 5 point wide spreads. It's gonna bring in like, if things go my way, I'll bring in like $800. And things are going my way, man. The stock market dropped and I almost cashed out just Friday, but it's got maybe another $300 I can make. So there's no way it's gonna make a new high, and that's where it's above. So I'm just gonna go ahead and let that ride a little bit more. But yeah, so it depends. Quantity, it depends. That's all. I don't know. I don't know. I don't even have a system of I'm gonna make it wide or I'm gonna make it small and buy 2, 3, 4, 5. It just depends. Yeah. Is that it? Cash, Cashmatic. Anyway, do you like breakout? Let me just see if I got all your questions. Can't believe I dropped off, man. Hate that. Always follow your own opinion. See, you know what's up, Cashmatic. We talk. You know what's up. You got it. Just get out, start learning from you. What state you're in? Yeah, I missed TR Tricks 4064. I think he's the one that answered the question that made me get on here and talk stocks. He says you are confused about selling calls. Do you let it expire? No, no, man. Get out. At least, see, it depends. It depends. 30, 50% of the credit, right? So if you sell something for $1, right, $100, look to get out when it's $50, right, and then redeploy it. Don't go to zero, because you got to put it this way. Always ask yourself this question: as you're making money and that option you sold is losing value. Let's say you sold a stock, you sold a call for $100 or a call spread, right? And let's say it's worth $20 now. Ask yourself this: would you buy that right now? Would you sell that right now for 20? For 20 cents? Would you sell that? And if you say no, that means get the hell out. Just close the position, because it's not enough meat on the bone. So 20%, but if it's 20 cents and you wouldn't do it, that means you have a chance to lose 80 cents, right? $80. So just get out. You don't want to lose your profit, so anyway, when I sell, I don't ever look to go to expiration. It's like rare. I sold calls at new highs, like $5 above the new high. I might let those get close to expiration because I feel we ain't gonna hit a new high anytime soon. So something like that, I'm thinking, yeah, I might let that go to expiration, but I don't know. I probably won't, because we could wake up and say somebody found a cure to the coronavirus or whatever, and they making this, or whatever. I don't know. And the market's up 700 points that day. When volatility is high, like 20% right now, the VIX 20%. Just as it can go down 600 points, it can go up 600 points. So you definitely have to be careful. You have to be careful. It could rip in your face, so get out of those positions that made you some money. Any more questions? But I don't know, what do you do? You said you confused. Yeah, okay, that's already answered that question. Yeah, so that's what I do. I'm better, but I'm not. That's why I say don't follow me. Like, don't follow my trend. I don't usually, well, yeah, because I lose money. You know what I mean? And I have good streaks. Just like this is everybody. You have bad streaks. When you suck, learn to just take a pause, find a way to turn it around. Yeah, these are things that you're going to learn about yourself, and everybody's different. You got to find what works for you. So these are things you're going to learn about yourself that's going to make you better. You can't be a duplicate of somebody. You can't. You will lose money. Oh, so I know what I was talking about when I got disconnected. If you follow somebody, remember these guys got $100,000 of money, right? $100,000 a share. When they telling you, oh man, I really like Caterpillar, they're doing great, we're about to turn around, they're gonna be selling more tractors, this is a good buy point, yeah, I'm in, I'm gonna be buying Cat. They trying to dump their shares, man, and they're trying to pump. They on a platform that reaches millions of people, so they can pump their little individual stocks and say how great it is, so it can start going up, so they can start selling their thousands or millions of shares. You got to be very careful of people that you hear on the radio, because this is, or CNBC TV, whatever, Bloomberg. When I mean the whole financial channel, I'm not throwing CNBC under the bus, because it's everybody that puts you on a platform that allows you to speak to millions of people, and you could definitely pump some stocks that way to get out. Okay, so they can't get out at any time they want, because they own too many shares. They'll tank the stock, so they get a little elevated a little bit. Or when they're trying to buy a stock, oh yeah, let me see, good, yeah, I don't like Tesla. Tesla's not making money. This is crazy. Blah 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 blah. Because they missed the run and they want to get in. They want to influence you to sell your shares so they can buy them. It's really crooked. It's really a crooked game, man. It's unbelievable how crooked it is, and that's why you gotta follow your own shares. It's more, the manipulation is insane. Into trend following for sure. That's my favorite. Buy, look, buy something that goes up, it continues to go up, right? If something is going up from bottom left to up, look, from lower left to upper right, buy it. Don't you want to try to buy low, but don't worry, it'll continue to go up. You know what I mean? And generally, stocks that go down, they continue to go down. Stocks that go up, they continue to go up. Stocks that go sideways. Yeah, this isn't very important. I'll leave it at this. Especially with investing, not trading. You pull up a chart. I don't know if you can see that screen. You pull up Delta, for instance. I like Delta. Let's pull up but it's going up for the most part. You see this? This is from 2015, and it went from 50 to 60 in 5 years. This is taking forever. Let's call that a side hit. Let me follow. I like Delta. That's unfair. AT&T, sideways, right? So if you invest in AT&T, and you see it's going sideways since 2012, guess where your money's gonna go? Sideways. It's gonna go sideways. Another example. Hold on. Microsoft. These are monthlies, right? You see that? If you buy that, most likely you will be right. It will continue to go up. It's getting a little toppy now, though, but it will continue to go up. You don't see chop. This thing's been going up forever. Why wouldn't it continue to go up forever? It might go up at a slower pace, but stocks that are choppy remain choppy. Stocks that go up continue to go up. Stocks that go down, let's bring up oil. XOP. See? Stocks that go down continue to go down. You don't buy this, okay? Don't try to catch the bottom. That's really so basic. It's not even funny. That's why I'm laughing. And I had a thing that I did with Deborah, and I would say, buy or sell. Ask your kid. If you got kids, pull up a chart and say, do you buy or sell that? And watch them say, sell. And you pull up Microsoft, you say, you buy or sell that. Watch them say, buy. It's really that easy. For the most part, a stock is going to continue to do what it do. If it's chop, it's chop. Stay away. If it's going down, it's going down. Stay away. If it's going up, buy those. Buy them. All right. There. That's the best advice I can give you. And that's actually, believe it or not, when I started doing that, it changed I'll call it investing. It changed it. totally changed it. I started making good money. It's just pull up a chart and going up, the balance sheet is good. Trust me. If it's going down, it's bad. That's why it's going down. This chop, it's all over the place. It's probably cyclical, so it's really that easy, so just kind of look at the charts, pull up a monthly. You don't do it with the dailies, do it with the monthly, and just see what it does. What it did in the past, most likely it's going to be the same in the future. So that's the best advice I can give you. And put your money to it. Would you start buying XOP? I remember right here, but would you start? Is it really going to go back up? You know how long it takes to go back up to there? A long time, so by the way, XOP is the oil and gas ETF. Here's another one for you. I like Exxon. That's the monthly on Exxon. Look at that. Oh my God, that's so ugly. This used to be a bellwether. I mean, if you own Exxon, you walk around like this with your chest out saying, yeah, I own Exxon, Look at that. That thing is going lower. Look at that candle. Oh my God. So anyway, yeah. This is saying it's screaming don't buy. I don't need to look at the financials. I don't need to look at anything. I just need to look at that monthly chart. Just don't buy. All right, so that's what I'm going to leave you with. I'm 43 minutes into this video. Thanks for watching. This YouTube channel is This Is Dre, but you can follow me or message me on Twitter at Dre Trades at Twitter and on Instagram at Dre Trades. That's how you best way to get in contact with me. So thanks for watching. I check out my YouTube stories, right? I put those out. I'm trying to get more into those and YouTube videos. I go live usually around noon, 11 to 1 usually on the week. All my videos are live. I don't even like making a recorded video anymore. So I speak live. I don't record it and edit it and show you the only things I want to show you. I just do live and I speak from the top of the dome. Because I don't care if I make mistakes. I don't care if I stumble on the lingo. It's just me. It's Dre. This is Dre Trades. You know what? So yeah, thanks for watching. And I'm gonna go check out Deborah. We're gonna eat together. I'll see you later. This is Dre. Yo, Cashmatic, man, appreciate you. I really do, man. Thanks for watching. This is Dre. I'm out.